Hey everyone, I hope you guys are doing good. So today in this video, we are going to talk about one of my entry models, right? And this is not a very safer entry model. This is much aggressive approach, and this is what I call volume candle entries, right? So obviously, entries are the last step after the whole cycle is completed. You want to get into the trades, and we have quite few entry models, right? This particular entry model is one of very aggressive entry models that I use, and I only use this when I'm up a particular percentage for the day, right? And again, you need to have much good understanding of the candles in order to use this entry model. Now, what are volume candles? A volume candle is a strong engulfing candle that prints because of high trading volume, showing clear market intentions, right? So how can we utilize it? Say that in this particular example, price goes back to a level of okay, let me just draw it quickly. Price goes back to a level of inducement or mitigation, and then we start to see what we start to see weak candles like this, maybe indecision candles or all those candles, and then we see what we see a strong volume candle. So let's say this is our PY. I'm going to draw the PY as well. So say that this is our PY to the left, and what do we see? We see quite uh, weak candles, right? And then we see one bearish engulfing volume candle taking out the highs, liquidating these weak candles as well as closing down the POI with quite great volume. Now, in this particular case, we can do two things. Either we can simply market execute right there, have stop loss above this point, or what we can do is we can set our limits at this candle and stop loss right up there. Now, again, this entry model is used regardless of the breakout structure. So say that you're waiting for a breakout structure. It could be something like this. We have what we have low, high, low, high. And if you're waiting for a breakout structure entry model, you want to wait for this breakout structure, and then we don't even know if price is gonna come back for this mitigation. So that is when we use aggressive entry models, and this is one of them. So we see what price mitigating up POI, right? Going back to the last inducement mitigation level, we see weakness in strength. So say that we have big bullish candles coming in, and then we see weakness in those candles. Like there, we see bearish candles, and then we see a big volume candle coming down, engulfing those previous candles as well as closing below the POI. Now, if the volume candle wicks previous candles in this scenario, takes liquidity and still closes with a strong move like this, the move is more reliable, right? And that is when we can you can say that execute it with much more confidence, right? So again, you got two options depending on the risk reward. You can market execute in here, or you can just wait for the next candle to open, wake up, you press sell button, and then let it flip. Now let's real quick look at the examples of this particular entry model. So I have this pie section, and these dots represented valid trades. I won't get into the technicals of those trades, but we have what this one. So we have this one is going to be an A plus setup, and this one is the next A plus setup, right? These two in between, these are not the best possible setups, but yes. So let's look in the entries how we can use this aggressive model, right, for our entries, right? So in here, what do we see? We see quite strong, right? So first things, we induce this level of liquidity going back into this inducement point, right? And now if you guys are waiting for a break or structure confirmation entry, you will be waiting for this break level, right? But if you are following aggressive entry model, this one, the particularly the one that I'm showing you right now, this is how you want to execute. So you see price is bullish. We have bit strength in the bullish candles. We see what we see weakness, we see rejection from the upside, and then we start to see bearish candles. But none of these bearish candles are what are with the greater volumes, right? So do we have any entry mode? If this volume candle closed below at this point, right, this would have been a really nice volume candle, and we could have market executed at this moment. But no, So we're gonna come back to this one. Now we came back to this level, right? And what do we have now? We have any volume candles? Now this candle isn't actually a proper volume candle. Why? Because look at the candles to the left, right. No. What do we have in here? Yes, in here we have a really nice indicator. We see weakness, and then we see what? We see volume candle, this one, right? Now what can we do? We can execute. We have also this POI as well. So this is going to be your entry right here. Good. Volume candle showing us intentions. You can simply execute right there, stops above this one, and that's how you can take a nice little entry. Right now, same thing in this as well. We did an inducement or whatever we did, I won't get into that. But what do we see? We have bearish intentions, strong bearish candles. We start to see weakness in price, right? And then we see what? A big volume candle engulfing the previous candles, and this is exactly what we are waiting for. And this is your potential entry, right? So now you can enter in two different scenarios. Either you wait for price to come back on the extreme zone, or you can simply market execute when the price when the third candle after the volume candle wicks below, and place your stop loss. So this is going to be your first entry somewhere in here, right? And this is going to be your limit entry, depending on what? Depending on your volume candles. Now same thing in here. What do we have? We came back to this point, right? This is this one, and this one is not the A plus setups, but still, what do we see? We have something. We came back to that level. Right now, see this. Is this a valid volume candle? No. Why? Because look at this. Do we see weakness before this candle? No. This is quite strong bullish candle, right? And this isn't considered as a proper volume entry candle. So what do we see? We wait, and this is injection. So price induces injection, takes them out. We have strong intentions, and now we got 1 2 volume candles engulfing previous candles, and we can do what? We can market execute either here. Okay, my bad. So either we can market execute on the third candle, or stop loss above this side, or we just wait for price to come back. And this is going to be your entry for this particular setup using the volume candles. And now the second entry is right here. What do we see? We have clear bearish intentions, bearish volume candles. What do we see? We see bit of weakness. We fix below, so we liquidate them, right? And then we see what? We see volume candle, the bullish volume candle right in there, and we have one and second. So engulfing the previous candles, we can simply execute on the third candle wicking below, stop loss below, and we can let this trade run, right? So I hope this is quite clear how you guys can use the entry volumes, right? Volume candles for aggressive entry approach, right? Again, this is an aggressive entry model, and you only want to use it when you are quite up for the week, right? When you are up for the day, that's only when you want to go with the aggressive entries, right? And also depending on the market conditions and the volatility. So if there's a great volatility in the market and you don't expect price to come back to your entry points after a breakout structure, you can utilize this entry model with a small risk. So I hope everything is clear so far, and I'll see you guys in the next video.